Hello, everyone. Today, we are deep diving into a stock that has literally turned the tables in the Indian automotive market, Tata Motors. Remember the days of the Indica? Well, those are long gone. Today, we're talking about a powerhouse that is dominating the SUV space and leading the EV charge with absolute swag. For any serious investor, Tata Motors isn't just a car company anymore. It's a tech-driven mobility giant. We've seen a massive shift in market sentiments, moving from skepticism to a rock-solid bullish outlook. The new Forever philosophy has completely revamped their brand image, making them a top-of-mind choice for the middle class and elite alike. Let's unpack how they've managed this turnaround and what it means for your portfolio in the long haul. The Indian obsession with SUVs is real, and Tata Motors has hit the bullseye here. By launching the Punch at one end and the Safari at the other, they left no gaps in the market. The Punch has been a total game changer, bringing that SUV feel to the masses at a Baisa-Vasool price point. Meanwhile, the Nexon continues to be a blockbuster hit month after month. What's the secret sauce? It's their focus on safety. Tata made 5-star GNCAP a household term, and suddenly, Indian buyers were willing to pay a premium for peace of mind. This SUV-first strategy has helped them grab a huge chunk of the market share from competitors who were too slow to react. They aren't just selling cars, they are selling a sense of security and status. When it comes to electric vehicles in India, it's Tata Motors and then everyone else. They have a staggering 70+% market share in the passenger EV segment. While others were waiting for the right time or better infrastructure, Tata just went ahead and electrified their best sellers. The Tiago EV made EVs accessible for the urban commuter, while the Nexon EV remains the gold standard for long-range travel. And let's not forget the charging ecosystem they are building through Tata Power. This Tata universe is a classic example of synergy within the Tata Group. For an investor, this isn't just about car sales. It's about owning the entire ecosystem. They are future-proofing their business while the competition is still stuck in the ice age. Now, let's talk business. The financials have seen a massive U-turn. We are looking at significant improvements in EBITDA margins and a very clear path toward becoming net debt-free. The passenger vehicle business has been decoupled, allowing for more focused capital allocation and strategic clarity. Institutional investors are sitting up and taking notice because the free cash flow generation is becoming quite robust. Even the JLR wing, Jaguar Land Rover, is finally pulling its weight with strong global demand for the Range Rover and Defender series. When you combine the domestic growth with the global luxury recovery, you get a balance sheet that looks much healthier than it did 5 years ago. This is a classic turnaround story that's moving into the growth phase. You can't talk about Tata Motors without mentioning Jaguar Land Rover. For a long time, JLR was a bit of a headache due to global supply chain issues and the China slowdown. But now, it's the crown jewel again. The reimagined strategy is working wonders. They are pivoting towards a house of brands, Range Rover, Defender, Discovery, and Jaguar, each with a distinct identity. The tech sharing between JLR and the Indian passenger vehicle unit is also bearing fruit. We're seeing premium features and design cues from JLR trickling down to the Harrier and Safari. This cross-pollination of engineering expertise gives Tata a massive edge in terms of product quality and premium feel, making their cars stand out in the crowded Indian market. The road ahead looks even more exciting. Tata isn't resting on its laurels. They've got a pipeline that would make any petrol head or EV head drool. The Curve is going to disrupt the mid-size SUV segment with its unique coupe design. Then there's the emotional comeback of the Sierra, which has a huge nostalgic value in India, but in a futuristic electric avatar. But the real game changer is the Avinya. It's not just a car, it's a vision for 2025 based on a pure EV platform. These aren't just concepts, they are the blueprints for Tata's global ambitions. By moving to dedicated EV platforms like Acti EV, they are ensuring that their future cars will have more space, better range, and top-notch performance. As investors, we must look at the flip side too. It's not all sunshine and rainbows. The competition is heating up. Mahindra is breathing down their neck with the XUV and Thar series, and Hyundai Kia are not giving up without a fight. Then there's the risk of raw material price volatility. Lithium prices for batteries can be quite a roller coaster. Also, while the EV market is growing, the charging infrastructure in India still has a long way to go before it hits the tipping point in rural areas. Tata needs to maintain its execution speed and keep innovating to stay ahead of the curve. Any slip-up in product quality or a global slowdown affecting JLR could act as a speed breaker for the stock's momentum. So, what's the final Hisab Kitab? Tata Motors has successfully transitioned from a legacy automaker to a modern, tech-heavy mobility company. Their SUV dominance provides the cash, and their EV leadership provides the future growth. For long-term investors, the demerger of the commercial and passenger vehicle businesses will likely unlock even more value. While the stock has already seen a significant run-up, many analysts believe there is still steam left because of the improving margins and the massive EV tailwind. It's a classic Atma Nirbhar story that aligns with India's growth trajectory. As always, don't just take my word for it. Do your own due diligence and consult your financial advisor. But one thing is for sure, Tata Motors is in the driver's seat of India's automotive future. Cheers!